Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And again with me, I have none other than Rob Levy, co-founder and president of Hero, that's HXRO.io, and he's also an amazing trader. Rob, welcome to Crypto and Blockchain Talk.
Thanks so much for having me. It's always a pleasure being with you here.
Well, it's really our pleasure because you're so smart. So this week, what I wanted to do was talk about exchange-traded funds and how ETFs are needed in the crypto space. And I'm not sure where you stand on this, but I'm sure we're going to hear all about it in a moment. So what I want to do is first set the scene. As we talked about a couple of weeks ago, there's been a new pick for the head of the SEC. His name is Gary Gensler. Apparently, he brings a wealth of crypto knowledge to the role. And it may be that he feels it's time for a crypto exchange traded fund, or ETF. Institutional investors and private investors as well, they do tend to, I don't want to say turn their backs because there's a lot of institutional investors out there in crypto, but many institutional investors and retail investors, they don't really know a lot about this space. They don't really understand crypto, they don't know crypto, and ETFs have this potential to be the next significant step in basically developing this market, the development of the crypto market. Let's first start out with what an ETF is, because that, I think, would help everyone who's listening to this podcast understand. And even though we've talked about ETFs many times before, it's something I still want to cover ground on. So, Rob, will you please lead in with what an ETF is?
ETF, it just stands for Exchange Traded Fund. And it's a basket or a portfolio, however you want to call it, of securities that trade as one asset or one instrument on exchange. And it trades just like a stock. So, for instance, the best and biggest example of an ETF would be this SPY, the spider. It's a stock that represents a basket of all of the stocks that are in the S&P 500. So if an investor wanted to go and buy the S&P 500, they wouldn't have to go on their brokerage account and buy all 500 stocks. They could just buy the SPY stock, which represents ownership in the exact weighting that the S&P 500 index has of all those 500 stocks. They can go buy the SPY and they will have the exact same exposure as they would if they were to buy the S&P 500. So it really simplifies things on an execution basis and also on fees and the ability to get good pricing. So ETFs are great when it comes to these baskets of securities. Now, I think I'll make the argument probably in a few minutes that we don't really need a Bitcoin ETF, as great as it would be to have one, but we don't really need one. Bitcoin is different in so many ways that you can go get exposure to Bitcoin much easier than going into your Charles Schwab or TD Ameritrade or Robinhood brokerage account and buying it. So, but the ETF has been a great instrument in markets. They really just have taken off, in the last 20 years, let's say. But they are, some of the most heavily traded instruments in the market.
Now, is it the case that ETFs are usually have lower fees and commissions than if investors bought and sold these on an individual basis? Is that the case?
Well, it's the case because it's like, are you buying the whole pie, or do you have to go buy all 8 pieces separately and then put the pie together? It's a one-stop shop. And in order for, using that first example of the S&P 500, it'd be virtually impossible for me or you to go construct the S&P 500 in our brokerage account. It'd be very difficult to do, and it would be costly on all fronts, on our time, on everything. It is cheaper on an expense basis, because if you're paying someone to get you like broad-based market exposure and you're going to pay them 2% to manage your money, and all they're going to do is pretty much buy the S&P 500, then yeah, it makes sense for you to go buy the S&P 500 ETF and pay much, much lower management fee, and you can do it with one click and you're done. There are certain times when an ETF, not necessary, but that's a different story.
I can also see the argument for it not being valid. I definitely want you to pound that one home. So at this time, crypto or Bitcoin ETFs aren't even legal in the United States. And the SEC has denied many applications, much to the chagrin of the Winklevoss brothers, who are really big advocates for a Bitcoin ETF. The alternative, which has been born from all of this, is basically this idea of a trust. As we all know from Grayscale Bitcoin Trust, we've done many podcasts on Grayscale. There's been a new example of a trust, which is 9 Point Partners, which is a Canadian fund that went public after they raised $180 million from private investors. And after they received their regulatory approval, they were listing their shares on the Toronto Stock Exchange. And I think that happened this week, that they actually listed their shares. Now, 9 Point is following, obviously, in the steps of Grayscale. And, of course, Grayscale is massive. Grayscale is buying up Bitcoin apparently faster than it can be mined. They own around $30 billion of Bitcoin and other crypto. But 9 Point, who, like we just explained from this Wednesday, is live, they are looking also to take a piece of this market. And there's many other people in the market, as with a trust in the market as well. So what is your thought then on these trusts, if you don't think that there's a need for a Bitcoin ETF?
That's a great question. And the only reason I think we need a Bitcoin ETF is because of these trusts. And I think that the SEC is through not yet approving a Bitcoin ETF. I think they're leading investors to these trusts like the Grayscale Bitcoin Trust. And this Grayscale Bitcoin Trust, while I think it has been a great instrument that has allowed people to get exposure who might not otherwise have taken the risk and gotten into Bitcoin because they didn't trust themselves with passwords and they were freaked out about losing funds and managing their own wallet. It has given the opportunity to some people to get in and see their values increase, but this premium that exists in this Grayscale Bitcoin Trust, it's detrimental to retail buyers. The SEC is all about protecting retail investors. Mm-hmm. I think they're missing the mark with this, and they're missing it in a big, big way. And I think they're actually causing harm and hurting retail investors by not approving a Bitcoin ETF to this point.
Right.
And I understand their reasoning. I get it in theory, but I do think that they're making a mistake. And I think we will see one, I don't know if I want to say within the next 12 months, because I hate having to be put on the spot, but I think we're going to see one relatively soon because, like you said, Gary Gensler, the new chairman of the SEC, he is pro-Bitcoin. I think it's different. It's not that they're anti-Bitcoin. It's just that the market structure as it stands right now is just not checking all the boxes for them. And they have they want it to check all the boxes. And it's not yet, but I think that we're getting a lot closer, and I don't think it's too far away, and I think there should be one. Retail investors they're paying a premium that should not exist. to own this asset or have exposure to this asset?
Well, you did raise that very important point that many investors would be interested in ETF because it means they don't have to actively manage their wallets and keys and the other crypto-specific information, because many people who aren't computer friendly, they just can't get their heads wrapped around this. Also talking about what you just said about when and you don't want to be pinned down, which I don't blame you, when a crypto ETF will happen. There was a quote by Kathy Wood from ARK Investment Management, who said that she doubts U.S. regulators will even look anywhere near a Bitcoin exchange-traded fund before Bitcoin's market cap hits $2 trillion US dollars. And that's what she really thinks, that the SEC will only be comfortable with this until it reaches that threshold. Where she got that threshold from, I don't know. And right now, it's just under 600 billion. So it's got a ways to go. What do you think about her statement?
Well, I think that people who have taken the other side of Kathy Wood's calls when it comes to the market have not had much success. I mean, she's brilliant.
Yeah.
She is just brilliant. And I think when she makes statements like that, it's not being pulled out of thin air. I think she speaks to people at the highest level of government and investing and business. She was supposedly the one who talked Elon Musk out of taking Tesla private, which we know now would have been not nearly as, to the tune of tens of billions of dollars. That would have been a big mistake on Elon Musk's part. So she's been credited with that. $2 trillion? Okay, so Bitcoin at 100,000. We are one headline away from that being truth. Like, this market, we see what happens in other markets and other assets. Bitcoin happens to be one of the most special assets of them all. So we see assets that are literally on the verge of bankruptcy doing 10x multiples at this point because a bunch of kids like to buy it. It would not be crazy at all to see Bitcoin at $100,000, anytime in the near future. So while she says $2 trillion, okay, I think today, right now, if we're at 34,000, 35,000, we're just under 700 billion. So let's multiply it by 3. It's about $100,000 Bitcoin. And that might not be so far away. And if that is the case and she's right, like she's been right about so many things in the market before, that's not too bad. And if it takes $100,000 Bitcoin to do it, that's fine. But the beautiful thing about Bitcoin is people can get exposure to Bitcoin without going through their brokerage, without any of that. You can open up a Coinbase account, open up a Cash App account, open up a Voyager account. There's so many platforms that let you buy Bitcoin, and all you have to do is know your account and password of your Coinbase account or whatever platform you're on, Blockfolio now. And you buy Bitcoin. So I think Bitcoin's very different than some stock that you have to go through the broker and then the exchange and buy it, and then it settles in a couple days. This is different. So I don't think we really need one, but the fact that people are being directed then into some of these trusts like Grayscale, where they're not buying, if Bitcoin's trading 34,500, they're not paying 34,500 for Bitcoin exposure. In Grayscale, they'd be paying 35,000 for it. And sometimes they'd be paying up to 20 to 30% premium to get exposure to Bitcoin. And I don't think that's right. You do not need to pay a 20 to 30% premium exposure to Bitcoin. And I think that's absurd. And that's why I think the Bitcoin ETF, if it's going to save people from doing that, then great. We have a hard enough time making money by picking instruments to invest in. You want to invest in something where you have a 20 to 30% headwind, a hurdle that you have to get over just to be on sides? Hell no. That should not be the case. That's really the only reason why I think we need a Bitcoin ETF. Otherwise, it's easy. We could spell it out easily to people to how do you go get an account at one of these platforms where you can buy Bitcoin. You don't have to have it in your own cold storage wallet and all that. It can be custodied on their exchange, but you don't have to pay a 20 to 30% premium. It's out of line. It's crazy.
It absolutely is. But, it just freaks people out. And this is really why podcasts like this exist, because we're trying to dumb it down for people without sounding disrespectful, we're trying to make people understand this really isn't as hard as it appears. It really does freak people out that there's this new word called blockchain that's associated with Bitcoin, that they need something akin to a wallet, or yes, they can store it on the exchange, although that's not really recommended. That they have to store and they have to have keys. And for some reason, even though everybody has PINs on their credit cards or the debit cards, for some reason, keys freak people out. It's the quote-unquote technology behind crypto, which for some reason I cannot understand, because it's literally the same as having a PIN for a bank card in my book. I don't understand, but as you know with your parents, and I know with my parents, they just don't see it like that. There's many people who don't see it like that. It just looks very confusing. Now, in saying that as well, 9point and Grayscale both package Bitcoin into shares, which of course many people feel is very palatable to them. They can eat that. They can understand that. And this is where you're right. Yes, if it's going to stop this fleecing by trusts, then absolutely. Now, you see, one other thing, though, that Cathie Wood did say is that, she made some projections about Bitcoin. And by the way, I think right here I'll do a disclaimer. And that disclaimer, as always, listeners, and I'm sure you can recite this yourself in some way, shape, or form, is this podcast is in no way, shape, or form giving you financial advice. You have to go and do your own due diligence. You have to do your own homework. Get yourself a financial advisor if you cannot, for some reason, piece this together yourself. And of course, never invest more than you can afford to lose. These are just the mantras of investment. But what I can say is that Wood has been making some Elon Musk-esque kind of statements. And she's made, like I was alluding to, some bold projections about Bitcoin's price. And she actually said, which almost sounds like she's inciting that they should do this, she said that if every S&P 500 company invested 1% of its assets in Bitcoin, the price would increase by $40,000. That's not go to 40,000. That's increase by $40,000. That's her quote. And the quote went on to say institutional allocations between 2.5% and 6.5% could impact Bitcoin's price by 200,000 to 500,000 US dollars. That is a strong statement, I think, for somebody who is responsible to make. And, meanwhile, you have the JP Morgan analysts who are seeing 40,000 US dollars as a key Bitcoin battleground so that crypto can continue to rise. Now, again, another line in the sand. JP Morgan keep coming out with these gems, when, Bitcoin's going to reach 146,000 US dollars per Bitcoin. I mean, where the hell they got that number? Why not 140 or 150? It's 146. It doesn't, of course, really say when. I mean, people are like throwing these things out there, but if you're going to actually look at Bitcoin as an investment, how should people be taking a judicious approach to this? Who do they listen to? Especially when you've got the JP Morgans and, the Miss Woods of this world making these kinds of statements. And I mean published statements. How do you help people make managed approaches?
That's a great question. And I'll be honest with you. I think that Cathie Wood was being conservative. I think her numbers are on the conservative side because why wouldn't she make a conservative call? It's not that she'd be sandbagging, but it's a big enough call to make to where she would probably put a public statement like that out on the lower end of what the range is that she's really contemplating in her mind. And I think that it is on the low end. Any of us who are really bullish Bitcoin and think that we can't perfectly wrap our minds around what this is, what this means, what this could do in terms of US dollars, right? Everyone talks about Bitcoin in terms of US dollars. But it's looked upon in U.S. dollars by at least 25% of the world, let's say the people who live in the U.S. or the the money that's based in the US. But elsewhere, people are looking at Bitcoin in terms of their own sovereign currency. People in China are looking at it based in renminbi, and in Japan, they're looking at Bitcoin in terms of yen. In the UK, it's in terms of pounds. So it's basically a statement of what is this asset going to do once people really wrap their heads around it and look themselves in the mirror and say, my euros that I own, my pounds, my dollars, my yen, what's going on with that currency right now? And what's going on with that currency right now is 12 years, 13 years of monetary policy that has been stimulative, and some of the most stimulative in this easy money because it's needed to be, and because they can't really pull back and normalize that policy. So when you have these central banks and sovereign nations they're doing what they need to do to keep the citizens and the public happy and to keep things in order and keep the economy humming along. They're targeting a 2% inflation rate. They're doing all the things that all the economic theories tell them they should be doing. And then you have an asset that was built and it was modeled after gold and that same sort of supply curve where it gets harder and harder to find more of it and to mine more of it. And now Bitcoin has a less than 2% inflation rate and it's only going to decrease over time. You can't compete with that mathematically. Mathematically, it doesn't work to compete with that. So holding everything the same, the US dollar, the Japanese yen, the pound, the euro, they all have this massive headwind because the money supply is growing. And it's growing faster than it really ever has, especially in the US and in euro. I mean, things have never been more easy in terms of easy money policy. So mathematically, they don't really stand a chance. Bitcoin's got this game. It's all wrapped up. This is new technology. People don't trust the underlying network. What you don't know is the scariest. And thinking about relying on computer networks and digital networks and the fact that there is no central bank to backstop Bitcoin, that makes it a lot more scary. I mean, imagine if every time Bitcoin goes down 30%, we've got the Bitcoin central bank who comes out and says, we're here, we're going to buy this much Bitcoin every day to ensure that there's enough liquidity in the market. Imagine if that was the case. That's not the case, though. There is no backstop. So a lot more unknowns with Bitcoin with respect to that. The bottom line is mathematically, Bitcoin has the tailwind here, and the dollar and fiat currency in general, that is facing a tremendous headwind. And we're in uncharted territory with respect to policy, and we don't know how that's going to go. I feel strongly that there's not going to be an end to the dollar. There's not going to be an end to fiat currency. We need it. I mean, there's things about it and having a central bank that backstops things that are very positive. I don't view this as a competition, but the bottom line is, and what Cathie Wood and what all these other people see, is that if all your exposure is in fiat terms and US terms and euro, yen, you need to manage that risk. Your future wealth is at risk. And there are ways to hedge that risk. And the bottom line right now is that Bitcoin is the best way to hedge that risk, plain and simple. And that's what smartest money managers on earth are saying right now. They're saying it publicly. They're saying it loudly. They're saying it proudly. And that's what matters. And it is difficult to make a statement like Cathie Wood says because she's putting an illustrious career on the line. Mm-hmm. She's really putting it out there. And I actually think she's being conservative.
I will just say, I cannot see Bitcoin reaching those values until they are actually more universally adopted and utilized as currencies. So for instance, you go into McDonald's and pay with Bitcoin, you go into Best Buy or, Burger King or God only knows what, until you have actual usage by the general populace, and it starts really gaining that kind of adoption. I've paid for stuff with Bitcoin. Of course, it's happened, but not at the rate that it would need to be used in order to get the kind of value it would need to have in order for it to reach those values of what did she say again? 200,000 to 500,000. I mean, it would need that, in my opinion.
What have you bought Bitcoin with? Because how do you think the pizza guy feels? The guy who bought 2 Papa John's pizzas. It's 350 million, I think, right now.
He traded 10,000 Bitcoin for 2 pizzas. This guy, and he did it in on May 22nd of 2010. This guy traded 10,000 Bitcoin for 2 pizzas from Papa John's, the first ever recorded real-world transaction involving Bitcoin. And I got to tell you right now, I think he probably wants to jump off a cliff. But if he had 10,000 Bitcoin for 2 pizzas, I'm pretty damn sure he's got a lot more than that.
I'll tell you what. What if your husband bought you or your partner or your friend bought you a $5,000 hairdryer or a $10,000 blender?
I would laugh my ass off, is the honest to God's truth. But look at that poor guy over in well, not even this poor guy. There's another poor guy over in Wales here in the UK who basically threw out his... And this is where people have this fear of ETFs, by the way, for losing stuff. He threw out his cold wallet and his drive, and it has the equivalent of 300 million US dollars on it, from what I understand. So he basically said he knows it's in the garbage, and he knows it's somewhere in the tip or the dump in the UK. And he actually said to the council, if you help me find my drive, I will split the money with you. So he basically said to the council, if you help me find my drive, which is somewhere in this tip that I threw out, I don't even know when the hell he threw it out, I will split this with you. I would be digging with my freaking hands and feet in that thing.
You're absolutely right. I've got a friend I've met through crypto who... he was very early. He was on it in 2011. I mean, he was on it. He was mining it on computers, and he was on the Ethereum ICO. Like, he was early. And he tells the story about years ago, him and his wife, they wanted a new kitchen. So they redid the kitchen, and they sold some Ethereum and Bitcoin for it. And then for one anniversary or something, they wanted one of the great Vitamix or one of those blenders that does all the magic stuff, and they sold some for that. And he was telling me, so I basically paid $5,000 for the blender, and we paid $400,000 for the new kitchen. I don't think that it takes being able to use or using Bitcoin for these day-to-day transactions. I tell my friends, my family, everybody that I try to get into Bitcoin and say, you need to own some. Please don't spend it. Just buy it. Don't spend it. I don't think you should spend it. And that's because I'm in the Cathie Wood camp, where I think this thing's going to be worth $500,000 down the road. I don't know when. I think it's down the road. I think it's going to be worth a ton more. I don't want to look back on 2 Papa John's pizzas, and if it's $300 million, I literally don't know what I would do. I honestly don't know what I would do. It just makes me feel so uncomfortable. I mean, seriously, I feel bad for the guy. It makes me feel bad. I don't want to spend it. I honestly think the best use case for Bitcoin right now is this store of value, this hedge against inflation, against fiat currency debasement. I mean, when was the last time, I was going to say, you talked about McDonald's or Burger King. When was the last time you went into McDonald's and bought a Big Mac meal with gold coins or gold? Bullion.
Yeah, but it's different because that, gold is actually used in things like people's teeth, in conductors for electricity, in the parts in mobile phones. It's actually used in stuff. You can't use a Bitcoin to you can't just use it as a store of value, in my opinion. I mean, look, let's just look at land, something they don't even make anymore. All the land that's available is on the earth. I mean, and let's not talk about what's going on in Mars and all this craziness. Yeah?
Yeah.
Okay, so all the land that's out there. People, I mean, look, you could buy a house. You just go anywhere in London And even 20 years ago, you could have bought a house for nothing in some prime areas of London. And now that same house is worth millions. It's just the name of the game. Does it mean that people stop selling and buying houses or stop selling houses? Absolutely not. But what makes it valuable is the fact that people want to live there and people want to trade up and everything else. And that's what I think gives it its value. I know that might be a really poor example, but I'm just going off the top of my head. Yeah.
It's a great example. You can mortgage and you can basket up mortgages and you can chop them up and do things, but you're not going to go, let's say you do own that house in London and it's 10 million pounds or whatever. And let's say that is your only asset. You're not going to be going to the car place and say, you know what, I'm going to buy this Tesla, but I'm going to give you 1% of my house for this thing.
Yes, you can. It's called remortgaging. You can go and remortgage your house and then use that cash to go buy your Tesla.
You can. That is mortgaging the house. You can also borrow against your Bitcoin on many different platforms because there is value inherent in Bitcoin. And yes, you're not going to put Bitcoin in the gold engagement ring that you're giving your future wife. You're not going to put your Bitcoin in a bracelet for your daughter, but it's serving a similar purpose, and it was modeled financially. Mathematically, it was modeled after a scarce asset like gold. As you move on and as more and more gold has been mined, it incrementally costs more to mine the next ounce of gold. We've exhausted all the gold that's just sitting in the little streams and rivers and the California gold rush and everywhere else in the mines. Like all the easy gold, the low-hanging fruit gold has been mined already. To find the next big gold deposit, it starts costing incrementally more. And there's less and less of it that's actually mined every year. And that's how Bitcoin was modeled. It's on a schedule. It's programmatic. Every 4 years we have. So now, just last May, we went from 1,800 Bitcoin being mined a day to 900 Bitcoin being mined a day. And that's a big deal because as the price goes up, we can soak up. There's enough demand to buy up 900 Bitcoin that's mined every day. Yeah, I mean, Grayscale itself, they're buying way more than that per day right now. And then you throw in Cash App from Jack Dorsey and Square, they're buying a slug of it every day. And then you look at Robinhood and they're buying a slug of it every day. So like that 900 Bitcoin a day, when you're looking at $10,000 Bitcoin, obviously that's different when you're looking at $40,000 Bitcoin. But the bottom line is that mathematically over time, less and less are emitted, less and less are mined. If you think about it in terms of gold, less and less are discoverable every 4 years that goes on. So Bitcoin, while it does not have an industrial use case, you can't use it for jewelry or teeth or any of those other things. Bitcoin has just as valid and just as important a use case in storing value that is not denominated in these fiat currencies. So it will continue to have demand, assuming that this mechanism of security, like the Bitcoin network is the most secure computer network, processing network on Earth right now. So assuming that continues to improve and become even more secure, more and more people are going to be spending real dollars, real euros, real pounds on energy to run their Bitcoin miners, secure the network, that Bitcoin will gain value, assuming there is no major security breach, assuming that quantum computing and, quantum hacks don't take the network down. I mean, there are things that I'm not smart enough to talk about. Elon Musk might be smart enough to talk about it, but there are some quantum computing things that might become an issue. But the bottom line is right now, Bitcoin is the best digital gold comparison that we have. And the future is very bright for value accrual in Bitcoin rather than fiat currency.
Absolutely. And I just want to make two comments. First of all, my next book, which is coming out, which I'm sure all of my listeners know, I have a lot of books about Bitcoin and crypto on Amazon, but my next book that's coming out is on quantum computing, and it will cover quantum-proof blockchains. I just noticed something quite interesting. I didn't even know this. You know, 9point, that new Canadian copy of Grayscale, they're backed by the Winklevi. Yeah, the Winklevi are behind this new trust, 9point, in Canada. That's really interesting. But what's also interesting is that Canada basically is about to release their first ever Bitcoin ETF for retail investors called Horizons. And apparently people are scrambling for it. The guy who wrote this article about Horizon, this new ETF in Canada, he is actually saying that he thinks trading Bitcoin is far too speculative and volatile for the average long-term investor. And he thinks that chasing returns at the expense of portfolio safety increases risks and limits the capital preservation goals investors ought to have as primary reasons for owning equities. Who wrote this article? Chris McDonald. He is not a Bitcoin fan.
Well, hey, bless his heart. Let's ask him what $28 trillion of debt means and how that's going to treat his fiat currency. And I mean, I think we're living in probably one of the most polarizing times
Absolutely.
ever. I mean, it's natural, though. 50-50. People, there's a right and a left. People are opinionated, right? And we're generally split down the middle. The problem is the real-time information flow and the fact that everybody has this pedestal that they can stand on and scream in the soapbox and talk about what their feelings and opinions are in real time, like their friends on Facebook and Twitter really care what they really think in real time all the time. That's why I say bless his heart. Let him write what he wants. I mean, history is just that he'll be proved wrong, he'll be proved right. But the volatility in Bitcoin it's here for, I'm not going to say it's here to stay forever. It's here for a while, though. And volatility in normal markets, it's been around forever. You know, like early, we go through periods of lower volatility when there's less uncertainty and there's less questions about what's going to happen and policy decisions and all that. We go through periods of low volatility and everybody who is in the market, they hate it because there's no opportunity. Everybody who doesn't care about the market, it doesn't mean anything to them. They just go on living their lives. So I love hearing all these different opinions from the guy like you just mentioned. But the bottom line is that people can make their own decisions and people can do their own research. And if people want exposure to Bitcoin, they absolutely should know. And I tell everybody that I talk to, believe me, my friends they've been hearing me talk about Bitcoin, not even from the early days, or else I'd be a much more well-liked friend if I was talking to them in 2011, 12, 13, 14. But since, the end of 2016, mid-2016, I've been really beating the drum. And the first thing I say is, they ask me, well, when should I buy it? Should I buy it now? I tell them, you should start buying it. Don't buy your whole, if you have a certain amount of money out there and that's what you put to work, don't buy it in one fell swoop. You don't have to just go get your whole allocation right now. But just dip your toe. Get some skin in the game. Follow it. Start reading it. Buy dips. Don't buy rips. Buy dips. This is a market that dips all the time. Mm-hmm. And, it also rips all the time. So when you see the big green candles on the chart, you don't have to buy it after a big green candle. Wait for the red candle. Buy it after it dips because it's going to dip and it's going to be volatile. And if you're buying it here, and back then it was low, it was when I started telling them whatever it was, $2,500, like you might buy it here, it literally could be cut in half tomorrow. And that doesn't mean that it's garbage. It doesn't mean it's going to zero. What I would tell you is buy more tomorrow if it's cut in half. But if it's $2,500 a day and it goes to $3,000 tomorrow, am I telling you to buy the $3,000 after the run? You can buy a little bit, but just take it slow, get in, figure out if you believe in all the things that I'm talking about. Go read it. But he shouldn't be telling people, don't invest in this.
Goldman Sachs told their clients that Bitcoin isn't good.
Uninvestable was the word I'm like, it's come to my mind that they said.
It was very much around those kinds of words.
This summer, I met a guy who was a wealth manager at Goldman, very successful, and a buddy of mine, we were golfing. I think it was on my birthday. A friend took me out golfing, and there was another guy there, and I gave him crap for that. I know how you guys look at this. You're telling your people stay away. And I told him point blank, I think they're absolutely nuts. Jamie Dimon from Chase, JP Morgan, did the same thing. Said he actually used the word fraud. And you got Warren Buffett, who, I mean, I look up to, everybody looks up to him in terms of investing, but he's a dinosaur. I don't want to know what the 90-year-old thinks about Bitcoin. He literally didn't even have a cell phone until 3 years ago. He's been so good at some things, but that's not the guy I'm going to look to for talk about what like generational changes in technology and money. I'm not looking at the 90-year-old who literally hasn't had a cell phone yet. There's certain people that it's situational where you're going to listen to them. And Warren Buffett called it rat poison squared. I say it's rat poison to sovereign and fiat currency. It's not rat poison to own it. Like that fires me up when I stuff like that, because I that the people who idolized Warren Buffett and stayed away from Bitcoin, everybody has their opinion, and we live in a world where everybody can voice their opinion in real time very clearly. So what you need to do is be able to filter it and really look at the big picture.
We are going to be looking a lot more at the big picture. Lord only knows where this ETF ride is going to take us, whether this new head of the SEC signs something off by the end of this year or whether it takes 5 years. It's going to be interesting.
Have you looked into really some of the mechanisms at work on the ETF front, like on the Grayscale Trust, for instance? What goes on the inside there and why they are buying up so much Bitcoin?
I find in life in general, which I can then hone down to what we see with the Jamie Dimons and the other people in this world who go, this is a Ponzi, this is a scam, this is all a con. Oh, I'm getting into the game. And the reason why I think they're doing that is not because they really believe in it. It's because they see how they can manipulate the market really easily, because they're such big players anyway. And so they're seeing all the scams that people have pulled who are not big players and getting away with it. So if they can actually do this and get away with it legally, that's why I think they're in it, because they're not in it for the love of it. There's no way you could sit here for 2 years, 3 years, 4 years, trashing everything about crypto, and then all of a sudden the next day wake up and say we're going to launch our own crypto. There's always something nefarious behind these kinds of people. I mean, come on. If you knew that your best friend was constantly calling this chick ugly and disgusting and he wouldn't want to be around her, and the next thing you know he's marrying her, you wouldn't be like, oh, that's a natural progression. You'd be like, wait a minute, what's going on here? Yeah. What is there to benefit? And then you find out that this chick is worth $5 million. You know what the hell's happening. It's not because of the love of the girl. It's because of, he's probably going to bump her off in a tragic accident in the next 12 months. And that's what I think is happening here. Now, go for it. What do you have to say about that?
Well, no, I think you are looking at the big picture correctly. I mean, I think the question that you're saying through that example is Grayscale's insatiable appetite and demand for Bitcoin, is that natural? Is this really customer demand, retail demand for Bitcoin, or is there something else at work here? And what I can tell you is it's a blend. It's a little of both. For institutions, for smart trading funds, there is opportunity that exists with the Grayscale Bitcoin Trust, especially when the Grayscale Bitcoin Trust exists in a world without a Bitcoin ETF. So groups, funds, institutions, individuals that have access to Grayscale and to different intermediaries, they can take advantage of the market situation. And it's fully legal. There's nothing below board. It's all above board. It's available for anybody. And I'll tell you that this trade is getting crowded. It probably, for the end of 2020 and the beginning of 2021, is one of the most crowded trades in Bitcoin, in crypto, is taking Bitcoin, going to the Grayscale facility, and minting shares of the Grayscale Trust with that Bitcoin. Because what's happening is those shares of the Grayscale Trust, those are being minted at NAV in real time of net asset value. It's that NAV is marked to the cash Bitcoin market. So if Bitcoin's trading 34,000, you're minting those shares at 34,000. Those shares currently are held in restriction for 6 months. So you can't trade those for 6 months. It's not like you can mint them immediately and go sell them on the market and collect that premium. So held 6 months, and what the bet that the big, well-capitalized traders and trading desks are making is that I'm going to take my Bitcoin, I'm going to mint shares at NAV, at the price of Bitcoin, and I'm making a bet that in 6 months, when my GBTC shares are unrestricted, that I can sell them for a premium. And the premium has been as high as 35, 38, 40%. So if you think that you can get a premium on the GBTC shares, it makes all the sense in the world, if you have the money to do it, to take your Bitcoin, mint the shares of the Grayscale Trust, and make that trade. What's your risk? Let's talk about that. The risk is that we go into a big sell-off, bear market, and the risk is that the shares of GBTC, of the Grayscale Bitcoin Trust, actually trade to a discount to what Bitcoin is trading, because there's such a rush to the exits for everybody who had trust. We all know that that risk would be short-lived, because it should not trade below the price of Bitcoin for very long, because the mechanism would work in the same way. You would just go buy all the GBT shares you could and then sell Bitcoin. So this arbitrage should work both ways. But right now, with such a big premium in GBTC, this is a no-brainer trade. I can tell you, for trading desks, for traders that have capital, that have cash on hand to put to work, it's been a great trade. It's been one of the best trades of the year. And that's why we've seen such an insatiable demand for Bitcoin from that trust. And that's one of the mechanisms at work here. One thing that will happen when an ETF is approved is that we will see that premium that Grayscale Trust trades to the price of Bitcoin is going to collapse, or I should say it should collapse, because guess what? That best trade of the year all of a sudden loses its luster, and then we're on to the next one. And what I'll tell you is that the next one is the Ethereum Trust in Grayscale. That's an extremely popular trade of 2021 right now. That's one of the mechanisms at work here, which for smart traders, I can tell you it's been a no-brainer trade.
What I want to say is I'm going to actually do the disclaimer before we close this show out, which is nothing on this podcast can be construed as giving you investment advice. You must do your own homework. You have to do your own due diligence. Find yourself an investment advisor if you cannot, for some reason, figure this out yourself. It's very important that you take this seriously, because it's really hard to earn money, save money, and invest money. So you have to do your homework. On that note, and finishing on no-brainers and brainers, Rob, you're amazing, and I cannot wait to have you back on Crypto and Blockchain Talk. Thank you so much for coming on.
Oh, it's been great. I really enjoy the conversation. I love speaking with you, and thanks so much for having me.
Hey, listen, the pleasure's all ours and definitely the listeners. And talking about you, the listeners, we would love for you to tell your friends and family about our podcasts, which are available on a multitude of podcasting platforms. And they are all listed on crypto and blockchaintalk.com. And they include the podcasting platforms like Google Play, iTunes, Podbeam, Stitcher, Spotify, SoundCloud, and more. On top of that, we do play these podcasts on our sister radio station, Crypto 24 Radio, which plays 24/7 around the world. Don't forget as well, we have a series of books on cryptocurrencies and blockchain available on Amazon for students, including yourselves, of all ages, from the very young, like 3 years old, all the way up to adult. But we want to hear from you directly as much as possible. Of course, we have our normal social media, Instagram, Twitter, and Facebook, and of course, LinkedIn. But we love to hear from you directly. So if you would like to email us, please email us at education@savvydigital.com. That's education@savvy, S-A-V-I-I, digital.com. Again, thank you for tuning in. We look forward to having you as our listener again next week. So be safe, be well, and goodbye.